Hello everyone, this is Bull Smart Finance. Today we are talking about, is Indian economy going to surpass China in the future? The two nations, India and China, are the two populous countries and are among the fastest growing economies not only in Asia but around the world. Recently, India overtook the UK to become fifth largest economy in the world. The two nations, India and China, have shown active trade exchanges and investment despite of frequent border disputes and other geopolitical clashes. And because of being neighbors and populous countries, together with fastest developing economies, both are often compared and discussed. So, the question is, who will develop better in the future? Will India be able to surpass and replace China as the center of Asia? The answer is yes, India can definitely do it. Although India's savings are only half of China's and only 10% of China's FDI flows into India every year, although India lags behind China in infrastructure development for about 10 to 15 years, although in China more than 30% to 40% of GDP comes from productivity growth, not from the capital or labor growth, which is much higher than India, but the quality and efficiency of India's economic growth are better, and surpassing China is just a matter of time. And here are some key facts. The first one is GDP growth rate. According to the PTI report, India registered a growth rate of 8.9% in 2021. However, China registered a growth rate of 8.1% in 2021. Moreover, according to the annual World Economic Outlook report, IMF has projected a fairly robust growth rate for India of about 8.2% in 2022, whereas China's projection is just 4.4% for 2022, almost half of India's growth rate. China's GDP downward revision largely reflects the economic damage caused by Omicron outbreaks and the prolonged lockdowns in the part of China from March to May. What even worse is that the re-emergence of new, highly transmittable variants of COVID-19 could lead to even longer economic disruptions. And the second one is stock market performance. We are using Shanghai Exchange SSE as an example, as SSE index mostly represent Chinese stock market. In the last 10 years, SSE index only grown by 37.23%. However, Nifty 50 has grown by 274.11%, and during these years, China economy was growing with such a fast pace, but still Nifty 50 has outperformed SSE multiple times. Moreover, from the above chart, it is easy to figure out that Chinese stock market is much more volatile, but Indian market shows much more stable growth. This result is because of the strict regulation that Chinese government has implemented on stock market in China. Also, regular crackdowns on listed companies is a big problem. One more fresh example is Evergrande crisis. All of this together is making Chinese stock market much more unpredictable and unstable. Above two facts are only examples that shows India is surpassing China. Besides that, India has much more certain advantages and potential. So, what are the core reasons that is making India more powerful? The first one is software industry. India's software industry is booming, which is already one of the best in the world. According to the Economic Survey Report 21-22, computer services comprised 49% of the total services in the first half of fiscal year 2022. And it is also reported strong growth due to increasing demand for digital support, cloud services, and infrastructure modernization. India's IT industry is employing more and more workers every year. Data shows that in 2009, the number of employees for IT industry was 1.96 million, but in 2021, the number increased dramatically to 4.5 million, and it is expected to grow to 4.85 million in 2022. At the same time, the percentage of the IT industry in GDP is also increasing. In 2020, it accounted for 8% of India's GDP, and it is expected to contribute 10% by 2025. In contrast, the development of China's software industry started relatively late, and there is a big gap. The second one is population advantage. India has already surpassed China and became the world's most populous country. The UN predicts that by 2050, India's population will swell to 1.68 billion, making it far and away the world's largest country by population. In the meanwhile, China's population will shrink to 1.31 billion. More importantly, the proportion of young people in India is much higher than that in China. India has the largest youth population in the world. Around 66% of the total population is below the age of 35. But the number for China is only 43.78%. Every year, at least 10 million people are employed in India, and most of them are the young people around the age of 18. Low labor costs have become a major advantage of Indian manufacturing. In the meanwhile, China's aging trend is accelerating, and due to the China's one-child policy in the past, the youths of China now are not willing to have babies. The third factor is infrastructure growth. India's infrastructure lags behind China for decades, at least 10 to 15 years, which is also the main bottleneck of India's economic development. However, with India's development, this disadvantage will turn into opportunities, and infrastructure investments will further promote India's economic development. And the fourth major factor is internationalization of education. And thanks to the popularity of the Indian English and the popularization of college teaching curriculum in English language. This is the main reason that keeps the Indian talents up to date with the technological advancements happening all around the world. Also, English being one of the most popular language that connects people all around the India. And this is one of the prime reason why foreign entities prefer to do business in India rather than in China.